Well, Sterlite Tech reported a weak set of numbers in the second quarter of financial year 2020 on account of lower volumes and pricing in the product business. Moreover, the company also expects lower profitability at least for the second half of financial year 2020. To help us decode the key factors at play for Sterlite Tech in the quarter gone by and to explain the reasons behind this cautious outlook, joining us now on the show is the Group CFO Anupam Jindal. So, sir, to start off with, the company's aim was to reach a 700 crore profit mark in the financial year 2020, which at one point of time looked easily achievable, but now it appears to be a tall task. Do you think it is possible to achieve this target now? If not, what are the factors that have led to this?
Sure, Samit. This entire $100 million or 700 crore overall PAT guidance was given almost like 3 years back for the current year, when we looked at the direction and said that this is something which is something we want to achieve. And the market continues to be very challenging in recent past, while we were looking at our own journey and the kind of investment we have made in technology, capacity and talent, and we are looking at monetizing that, leveraging that. In terms of the developments which are happening, the industry continues to be challenging. We weathered that for a good almost like 3-4 quarters. But I think the kind of challenges we see are going to be there for some more time, and that's why we have given this cautious outlook for H2 in terms of volume to be flat as compared to last year. So that's the major reason which we feel could have some bearing on the number which we are talking. And the profitability from revenue, from margin perspective also will have some bearing. But in the long term, we continue to be very, very bullish, because the kind of traction we are getting from the customer, the kind of solutions and products we are developing, I think these are getting a very good response from our customers worldwide, and we continue to have good export market, even at 30% last quarter, and even for half year, it continues to be around 38-40%. So these are the things. We have got very good new customers. In fact, 26 new customers and in two new geographies. So these are very good developments. If we look at maybe in the next 2 to 3 years, we see a very good growth coming in.
So, given the stretched balance sheet of the Indian telecom companies, a decline in capital expenditure was pertinent. Also, you didn't receive any large orders on the service side for quite a long time. So, why has the management turned cautious now?
See, we were still having a very good order book which we were delivering. In fact, our existing volume continues to be similar to what we did last year. So we were not really having impact of the downturn or the challenge from the domestic side. But of late, it has started affecting us, particularly from India as well. And this is again a development which we saw affecting us in the last quarter, and that's why we are saying that it will have some impact. So for us, we continue to have very good traction from both India and outside India until now. Maybe for some short period we will have this kind of impact, and that's why we thought it appropriate to come out and talk about it now.
Okay. Now, coming to the second quarter, after a rise in margins in the previous quarter, that is in the first quarter, again in the second quarter, the margins have declined. Is it because of the weak fiber prices or more contribution from the service business?
Yeah, I think the margins are again a play of products and services. The margin in the current quarter at EBITDA level were still at about 22%. So I would say it's a marginal decline because mix has slightly changed. Services are about 50% as compared to about 40-45% in the last quarter. But generally, we continue to see good momentum. Yes, some impact was also there because of the lower volume in our cable business, which we had as compared to last quarter.
Okay.
In our fiber cable business.
Okay. Does your full year EBITDA margin guidance still remain at 20%? Because I guess for the first half you have done about that, and if your guidance remains at 20%, which means that in the second half your margins will be as low as 16 to 17%?
I think from our perspective, since we have done H1 close to about 22%, even at 20% plus, I think it will be closer to 20%. Even H2, it may be lower than 20%, but yeah, I mean, for the full year, we are looking at 20% plus. because of the flattish volume in the second half as well, and some larger contribution coming in from services business.
Okay. Now, in the first quarter, the fiber prices were near $7. How were the prices in the second quarter, and how do you see the prices to pan out for the second half of financial year 2020?
Yeah, I think in the current environment where everybody is talking about prices, we are actually getting much better because of, again, the kind of customers and the products we continue to have. So prices were in the similar range as last quarter. H2, we are looking at some prices coming down for us also, again, because of the challenges in the volume side. While we'll maintain the volume which we did last year broadly, but still from the capacity which we have got, I think realization are going to be about 50 to 55 cents lower than what we did last quarter, H1.
Okay. Now, of the total order book of close to 8,800 crore rupees, how much is related to products and how much is service related?
Total order book is about 8,100 crore as at September end, and broadly 50% is products, 50% is services, so about 4,000 crore on the product side and another 4,000 crore on the services side. So that's again a very good order book from our perspective.
Okay. Now, for the product side, new orders are hardly expected to come by, but how are things looking on the service side?
I think that's something which has come up very nice in last 3-4 years. I think that has really supported the company in this current environment as well, and we continue to see, and this is something which is helping the company become a true data innovator, data network innovator, and this is opening up a lot of opportunity. We are having many opportunities which we have participated in. So both on the product and the services side, we continue to participate in large opportunities. Difficult to say in terms of number, but we see healthy order book coming in H2. How soon it will come, maybe in Q3, Q4, we'll see how the split happens. But we are continuing to see, not just in India, but in fact with our international foray, we are seeing some traction coming in from international market as well.
What is the kind of orders that you're expecting? Because given your current execution rate, if new orders don't come by, then your revenues might start declining going forward.
I don't see that our revenue is going to be decline. We are looking at healthy revenue growth in the current year as well, including full year H1 and H2. We have done close to about 2,800 crore total revenue in H1, and we would expect it to be higher than that in H2. And in terms of the new order flow, we are confident that we will continue to get new orders. The kind of engagement we are having with the customer may take some time, but these will come. And some of the opportunities in services business are chunky. So when they come, they really have significant impact on the revenue in the order book.
Lastly, sir, by when are you expecting a revival in fiber demand?
I think this fiber demand, we are expecting it to be close to 9 to 12 months from now. So maybe second half of calendar 2020, we can expect 5G-led demand to come in fiber, and overall pricing environment also to improve.
Well, that would be all, sir. Thank you for speaking to BloombergQuint.
Thank you.